Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. There are a lot of similarities between gold and silver. Both look very bullish for the future, both near and far, but silver has a unique advantage beyond gold. Gold has already had its time to shine. It's already blown off the top. For example, like a pressure cooker, both are bubbling. Gold already has blown off. Silver, on the other hand, still has yet to really explode or to blow its top off the pressure cooker. The thing is that even though silver and gold are very similar in price movement, silver is a lot more volatile, and that also means that silver has a lot more potential. It hits higher highs and lower lows compared to gold. It's very exaggerated. It's like gold on steroids. If gold's going to rise 20%, silver would be rising 30-40%. But on the other hand, it's the exact, it works for the bearish side. If gold's going to drop 10-15%, silver could drop 30-35%. So there's a lot more potential in gold, there's a lot more, or silver, there's a lot more opportunity in silver. And right now this article is going to be talking about silver prices to catapult behind gold prices. This is branched off of the video I posted a little earlier today, where I'm talking about the same essence behind prices or price movement, and why silver has much more potential to even reach triple digits in the future, right? Whether it's looking at the signals, the signs from the charts from the past 1979, 1980, $50 silver movement, and the 2008 credit crisis leading to 2011 $50 silver, whether it's the signs, the signals that the charts have shown from that, whether it's the economic uncertainty from the people, whether it's Trump's warning signs or battles with the U.S.-China trade negotiations with this global pandemic. There's a lot of different angles to take it, and a lot of times it's from supply and demand. And that's where demand has been blossoming, especially in the first quarter of 2020, and also the supply diminishing. Low supply, high demand shoots the price up. So anyways, I'll shut up about that. I just wanted to mention that before we got into this video, so you have a little bit of backstory on the real potential. So anyways, with that said, make sure to smash the like button. Let's see if this video can get 250 likes. If you love precious metals, make sure to smash the like button. This article from Seeking Alpha will be in the description. So with that said, let's jump into it. So, silver is currently trading around $18 an ounce, which is far below its all-time high of $50 an ounce, which it achieved in 2011. Silver has a twofold demand in that it is a precious metal for industrial usage and also considered by many as an investment, as it is a hard asset. Government spending combined with central bank stimulus due to the virus will sooner or later debase currencies, making it hard assets such as silver more attractive as a store of wealth. Hard assets will gradually move into the spotlight, and silver, being one of the laggards, will become an attractive proposition. So here's the introduction. The bull phase in the precious metal sector is now underway, and it is apparent that silver prices have lagged behind gold prices for some time. Gold has hit all-time highs in most currencies except the US dollar, where it still needs to gain another $100 an ounce or so to reach the previous high of $1,920 an ounce. So gold is already blown up. Gold's already almost setting record highs, soon to be passing its all-time record high, but silver is still far from that. So silver is currently trading around $18 an ounce, which is far below its all-time high of $50 an ounce, which it achieved in 2011. So silver is gold's little brother, and sometimes it takes silver a little longer. And if you check out the video I posted earlier today, it's talking about the beginning of this movement and why this is the beginning of this huge rally that we've been waiting for. So today, we will take a quick look at silver's recent performance and what lies ahead for the poor man's gold. The silver chart for the past year. The standout over the last 12 months has been silver's dramatic fall due to the impact of this virus in March. However, silver has recovered to pre-virus levels. Silver suffered due to the virus, but has since regained all lost ground. So, worthy of a note is that a golden crossover this is when the 50-day moving average swings in an upward motion through the 200-day moving average, and has just formed, which is usually positive for silver prices. We can also see that the RSI and the MACD indicators are on the high side, but they still have room to move higher. The STO, however, suggests that in short term, silver is overbought, and they may take a breather, but we wouldn't count on it. So here's the demand for silver, which I was mentioning in the beginning introduction of this video. Unlike gold, silver has a twofold demand, and that is a precious metal for industrial usage, and also is considered by many as an investment, as it is a hard asset that cannot be printed, right? It cannot be created nor destroyed. That's where real money comes from. You are in complete control of your wealth when you invest in the physical precious metals. In terms of industrial demand, considerable usage was expected from the solar panel industry. However, in a recent market trends report by the Silver Institute, they predicted that the demand for silver in photovoltaic cells, or PV cells, would fall from 2020 to around 2026 as depicted in the chart below. This tells us that the use of solar panels may not be the large consumer of silver that was previously anticipated, and may account for silver's lackluster performance to date. But there also is many other things like 5G technology, silver nanoparticles, that is also used in the medical world, in the scientific world, in the industrial world. Especially with green energy, with photovoltaic cells, with silver nanoparticles, it's going to be huge with all this green energy, which is the new revolution. And silver is a wide player in the game, especially with 5G technology, which is going to be taking over. It's going to be the new age of the internet. Everything's going to be extremely fast, much faster than it is today. They said something that takes 20 seconds to download, or it could be taking like 1 to 2 seconds with 5G technology. So it's going to take over, and silver is a major component in that, since it's the most highly conductive metal for thermal conductivity and electricity. So in our humble opinion, the industrial demand is not as important as the investment demand, which we believe will increase dramatically and follow in gold's footsteps. Evidence of this is the Ishares Silver Trust SLV, an ETF that reflects in general terms the performance of the the price of silver. This ETF currently has net assets of $888 billion and trades on average 26 million units per day. This sort of liquidity offers this convenience that enables investors to buy and sell it at will. However, the investor owns a paper equivalent of silver and does not hold physical silver. The upside is that you don't incur storage costs, and the downside is that it is still paper and not the same as owning the real deal. So it's kind of talking about the pros and the cons of the ETF side versus the physical side. I always try to push and really talk about the benefits of physical gold and silver compared to the paper side of it, or the ETF side of it. And it really is up to you. A lot of people diversify into both. There is pros and cons to both, so I definitely think you should look into that. And it definitely does depend upon the individual, whether you want to go the digital side or you want to go the physical bullion side. So gold and silver ratio chart. The chart below shows the relationship between gold and silver, which is depicted by the gold to silver ratio. This ratio has been as high as 130 to 1, but we can see the gap is narrowing down and stands at 96 to 1, meaning that silver is outperforming gold already. But we can see the gap is some investors are of the opinion that this ratio should trade around 15 to 1. However, over the last 20 years or so, the average has been around 60 to 1, which I think is a reasonable expectation. And that's if you're trying to be realistic, 15 to 1 is just unrealistic in today's terms. This ratio still bodes well for silver, with gold at the $1,800 an ounce level, and would trade around $30 an ounce, which is almost double the price today. It should be noted that I'm using the paper price for the above calculation. If we would use the physical price, then it looks something like this. A gold maple leaf at $1,866 an ounce and a silver maple leaf at, let's say, $22 an ounce, each gives a ratio of 84 to 1, which is a tad less than the paper comparison. So you can see right here the ratio peaking at 130 and dropped. This means silver is outperforming gold. So the technical indicators have now unwound their overbought position and are more or less neutral at the moment. Conclusion. So here's where the meat and potatoes are. So silver and gold will hold or increase in value due to weakness in the global economy. Government spending, combined with central bank stimulus due to the virus, will sooner or later debase currencies, making hard assets such as silver more attractive as a store of wealth. It's going to capture the attention of serious investors, and not even serious investors, maybe even people that are standing on the sidelines in the investment world, and they're going to see the potential. And once the potential kicks in, once they have their eyes focused on this, they're going to see really the bigger picture, which they cannot see right now. Just like with Bitcoin, with cryptocurrency, before everyone was skeptical, once they saw the proof is in the pudding, that's when they jump aboard. The bull run in stocks is one of the longest on record, and a major correction is now overdue, which should see the markets fall and investors consider a reallocation of their investment funds. Hard assets will gradually move into the spotlight, and silver, being one of the laggards, will become an attractive proposition. I am long physical gold and silver, and I do own a section of producers in the precious metal sector. Do the work and act as soon before this train leaves the station and bargain price disappears for the foreseeable future. You definitely don't want to miss the boat. You don't want to be paying $30, $40 an ounce of silver when you can be buying it for $18 an ounce right now, just like Bitcoin. A lot of people are paying $15,000 for a Bitcoin where you could have been paying $1,800 like I was. If you get in early, if you could recognize the bigger picture, and you can get it in, and you're going to be the ones that make the most money off of it, profit the most, because you got in before all the skeptical people got in that are going to have to pay for that. So I hope you enjoyed this video. This video definitely shared why silver has a lot more potential in today's terms than gold. The gold to silver ratio being 130 to 1 means that that was the most that silver was ever, or that was the lowest silver has ever been compared to gold, the cheapest it's ever been compared to gold. And you need to take advantage of that, right? You definitely need to take advantage of that. If we can go in the future and look back on today's times, it would be obvious that silver was a ticking time bomb waiting to explode. But since there's so many distractions, since there's so much controversy and chaos, it's kind of hard to see that right now. That's why I try to take the blindfold off, so you can see the truth and see the reality on why silver has so much potential. I hope you enjoyed this video. The link to this article from Seeking Alpha will be in the description. Once again, this was Silver Slayer. Thank you for tuning in. Make sure to smash that like button, subscribe for new I post daily videos. I'm out. Peace.